Hey, what's up, everybody? This is Josh back here with part 2 on the Entrepreneur's Playbook. We are back with Andrew Hawkins on CPM Fire, talking about tax planning and how the approach is. And Ron, I think you're going to tell us about how it works with CPM Fire and what the approach of the company is.
Yeah, sure. So obviously we had part 1, right? Part 1 was just general tax planning. And I think what I'd like to do is move over into tax planning through your different business cycles, because I think that's really an important piece of what we preach. And that's like a long-term tax strategy. So just to who we work with with growing online entrepreneurs, or just in general or generally growing entrepreneurs. So I think it's very important to understand where we pick them up and where they want to go and where they are going, and to have a strategy, tax reduction strategy through those years. But I guess in general, what is our philosophy at CPM Fire? One is being intentional. And that's not like we talked about in piece 1, right? As you're picking up these little pieces, you're not really being intentional about your planning, right? You're like, oh, what about this? What about this? I feel like you're throwing spaghetti against the wall. You got to be intentional. And we'll talk a little more about being intentional through each stage of your business. Just a side note, right? We had 3 Teslas last year purchased in the month of December. It is real. But Andrew and I were talking about this. What do we really do for our clients? What service? What's the true value add? And there's so much as far as picking the ball up and carrying it for the entrepreneur and the business owner. But at the end of the day, it's like there's a trust that everything is being taken care of, whether that's in the good night's sleep or just being able to know that like that box is checked off. Hey, I'm being as aggressive as I can be with my tax saving strategy. I have a plan going forward. These are the things that I can control that are within my unique skill set. So I think there's a lot of attributes to the value that we create that essentially are intangibles for the entrepreneur, but are real and allow our entrepreneurs and our clients to be more successful. And then I think let's talk a little too about exit strategies. And our clients tend to think that maybe they don't have an exit strategy, but we've gone through several sales just in the last 2 years. And I think there's always good business strategies, always be ready for potential exit strategy. I know we hit a podcast on it, but always be ready. And that includes being ready from a tax perspective too, and understanding the true tax implications and being ready for certain businesses. There's really tremendous value that you can do, or you can take advantage of built into the IRS code. So anyway, those are just my thoughts from part 1 and going into part 2, but I'll pass it over to you, Andrew. Maybe talk a little about the different business cycles that you see in your tax planning strategies, and maybe let's hit one by one.
Yeah, absolutely. Really when I think about it, we've got clients that they come to us at every single stage of the business life cycle. As long as they've got this on their horizon, they're aware of benefits that could come of the need to have a CPA or professional working with them through each of these stages of the life cycle. That's a victory in and of itself. So we love, and we definitely don't turn away based on the business life cycle and where you're at and what stage you're in. But typically when I think of what the relationship looks like with your CPA or with your tax planner at each of these stages, it typically starts with businesses that are in the startup phase. And so you've got the idea, you're implementing the research and the development and building the foundation for the product that you're going to bring to market. And we've got multiple clients in this area. And what we really focus on is making sure that you're taking advantage of all credits that are available to you at that time. So research and development credit, certain energy credits that we can make sure from a cash perspective, you're not as strapped for cash. You're not burning through the investments that you have as quickly as you could be. And so getting you that money back, having the government kind of subsidize certain investments that you're making in your product that you're bringing to market there. And that could also be cost segregation if you're looking into residential real estate or commercial real estate there, making sure you're getting deductions early on in the stage of your life cycle. The next stage, and what we really have a lot of contact in, is the initial growth stage of a business. So you're starting to bring your product to market. You're starting to build a client base and really understand what the business is going to look like over the next coming years. And so you're post revenue, you're starting to generate that income and you're starting to have a tax liability. You can maximize deductions at that stage. But really what we want to make sure there is, cash flow is still maximized. You've got the ability to reinvest in your company and to accelerate that growth and scale as needed. So that could be work opportunity tax credits as you begin to, hire certain individuals to build that foundation for the company. You've got entity selection. That's always a key that we want to focus on, that you're in the right vehicle for the objective that you have for the business. So it's single member LLCs, S Corp to take advantage of minimizing payroll taxes, or depending on the type of investments that you're bringing on or investors that you're bringing on, whether you want to be a C Corp or not. There's a lot of pros and cons to consider and a lot of different variables to keep in mind when it comes to establishing the vehicle that you're going to take with you throughout the growth of your company. And the next stage is really what we harp on, where we find our most successful relationships to be. And that's as the scaling takes off, as you hit the hyper growth phase of the company. And this is where the wealth building opportunities can really come into play, whether it's retirement contributions, maximizing those out to minimize your taxable income, whether it's investing in real estate and building the wealth from a personal perspective as you're establishing the business success. The one thing we always want to consider is not hindering that growth at all. As you said, Josh, like a tax tail wag the dog. We want to keep that growth accelerated, make sure you're reaching your full potential, and then minimizing taxable income on the tail end of that. Cash flow planning is key there. Wealth building is key while still incentivizing that growth and not hindering it in any way. So we want to make sure we're taking advantage of any deductions that are available there, any retirement, wealth planning for the future, and building that financial freedom. And then what we like to do at that stage is really establish the 5-year time horizon, looking forward to an exit opportunity, because that's typically when the maximum amount of tax liability is incurred. And sometimes it's hard to really plan for that 5+ years into the future, because when an opportunity presents itself, typically things are incentivized to move faster. We've got other investors or whoever's acquiring the company likes to move fast. And so we want to be really prepared with our position there. So with certain clients right now that have said within 5-6 years, I want to totally remove myself from the company. I want to sell it to certain investors and go from there. We've implemented a C Corp entity selection form to elect a qualified small business stock to allow them to remove and save on about 10 million in capital gains taxes that they're going to incur there. So that can essentially be the most valuable position that you put yourself in over the life cycle of the business. So you're really incurring the most amount of liability at that point, just due to the success of the company. And so tax planning has never been more important than when it comes to the exit strategy that you're facing there. And so the qualified small business stock approach is a great thing to consider, but you need the 5-year time horizon to really implement everything that's needed to establish that position there. You've also got, we can take tax loss harvesting to minimize the capital gains at that point. We've qualified opportunity zones that you can move the capital gains into and defer those capital gains taxes for 7+ years there. And so there's so much activity that the government wants to incentivize you to act upon and to take advantage of, that they're willing to essentially subsidize part of those future investments or minimize the tax liability from it. There's so much to consider at each stage. There's not one that's more important than the other. To contact your CPA to make sure you're working with a team of professionals who've seen this over and over.
Yeah. So Andrew, as you're saying this, like what really strikes me is why it's so important to work with a firm that does all of this, right? Because how many business owners or businesses do you see that they have their tax CPA here and they have their bookkeeper here and they have their financial advisor here, and they're all giving them all these various tips? Like, how many times it would happen to me endlessly where some client would come to me and say, hey, my financial advisor said I need to contribute more to my SEP. You cannot contribute more to your SEP. So you have all this different advice and it's all conflicting and it doesn't work. Whereas you can go to these firms like CPM Fire that does almost all of it for you, right? So all of it is planned together. Everything knows what the other side's doing. You're not getting conflicting advice, and it's all working seamlessly together. Do you find that's much more beneficial on your end to be able to help clients when they're coming to you guys for all of it?
Oh, absolutely. The peace of mind that you get from having one touch point, one company that's intertwined and able to communicate about what's best for you and overall take the best approach is second to none as far as what it can offer you, maximizing all the benefits available, because like you said, there are different perspectives to consider. There are different objectives to accomplish, and every individual party has their reasoning, has their substantiation for suggesting those implementations, suggesting those strategies. And so when you're able to have a company that's will service you from each perspective, able to work together to maximize and accomplish those different objectives, that is key. And the peace of mind that it offers a business owner to not have to be the intermediary between all those different touch points. Like you said, whether it's financial planner, whether it's your CPA or your legal advisor, all the different touch points that you have to have as you're growing a business and all the different considerations that you have to take into place, being able to have that under one roof, have just a single correspondent, basically the lead that you can run all your ideas through and they communicate with you and take a holistic approach. That really allows for a seamless relationship, for ease of implementing those strategies, for making sure that you're not letting one set of objectives overpower the rest. Because it could put each aspect in a tough position if, like you said, over contribute to your set because you should be contributing more according to your financial planner. There's so much to consider, and it's too much for one individual owner to consider on top of everything that they have to worry about, on top of growing a business, employing a large amount of people, making an impact on their community. So having a company like ours that can handle all of the other aspects of the business, all of the strategy and planning involved to make sure that you're really taking advantage of everything you can. It's key, and the peace of mind that it offers is second to none.
Yeah, that makes sense. Yeah, I think this is a great discussion. I think this is what business owners need to hear is there's planning involved from stage one of your business to the final stage of when you cash out. And the more you can bring it all under one roof and the more you can just have this seamless financial planning or tax planning, everything involved, it's going to go smoother for you and it's going to go smoother for your professionals. It's just going to create a better overall experience. So Ron, any final words on this topic?
No, I was going to say, yeah, I just want, even if you don't use CPA on Fire, hopefully you guys, the listeners out there, get to see what does a comprehensive tax strategy look like, right? Can you build that with your current team? I'm sure it's possible. But also too, that like we mentioned earlier, the intentionality is, I can't overemphasize how important that is. And just planning, going forward, doing planning and having foresight, super important. But no, another good podcast in the books. I just want to remind all of our listeners to subscribe if they haven't already subscribed. We're getting some really good feedback. So I appreciate everybody giving us that feedback. Appreciate everybody being with us. And thanks, guys. Always a pleasure. Andrew, great addition to the team. Look forward to some future episodes, maybe getting into some individual tax strategies. Thanks, guys.
Perfect. See you next time.
Thank you all.
All right. Yep. Bye-bye now.